Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, February the 23rd, 2023. The markets continue to present us with some pretty strong trading opportunities, but confusing trading opportunities. As they work through this initial first leg down, every time we were thinking, okay, we're there and we've reached it, and they would jump and rally out of it, they would just, like they did today, reach up to the high right after the opening, and then bam, sink the market hard to new lows. But I've readjusted the labeling, and it continues to confirm or give some more support that we likely have seen the highs for right now, and that we have, or the trend, I believe, has resumed, and that is the downtrend, which leaves this B wave in place as complete, with wave 5 being a failure. There's a lot of question about this whole pattern, and maybe this whole thing is corrective, and the 4 is ending here. So this 4 would be down here. I get that, and I get the whole situation. Even if I go and put it out on the daily, it's not like you're breaking every rule in the books and the 1 is way down here. But this 4, as compared to the 2, is huge. And that's the problem, the biggest problem I have with that particular count. But quite frankly, it does ABCA, then we get, but even though this, and the second part of why it doesn't make sense to me, we get the ABC here, and then, but that is 5 waves, except in the NASDAQ, if I break it down and look back at that hourly chart, I get it. This is like, what was all that and what's all this? So basically, it turns into an ABC, and it's very strange. And I don't disagree. But again, then this following would be, again, I'll count it, ABC. Is it acceptable? All by itself, without any other labeling around it before, or maybe even what comes after? I would say yes. But when we put it up again on the daily, or even go on the 4-hour chart, that shows it as well, and we can open it up. This would be wave 4, and this is wave 2? Huh? It doesn't make sense. And it's huge in comparison. And in any of the corrections within this minute degree run. And the fact that it ends in 5 waves up is why I've let, and then slams down, and the size is why the 5th wave failure really does fit. It does fit. I can go 1, 2, and this is a 3 here, and a 4, and then we get a 1, 2, 3, 4, 5. And I can break it down, and I did, and it does fit. So strange right there in the middle. Those were all on numbers. And I have to look on the 14th, it was CPI. Bing, bang, boom. So again, I'm still fairly satisfied with 5th wave failure, the C and the B. And not that this is going to carry out, and now we're still going to go race up and get above 12,950. Now, technically, and everything put together in a perfect world, sure, that possibility would remain alive. But when we see what's happening in the treasuries, we see what's happening in the Fed funds, we know, based on what the Fed funds are telling us, that interest rates are going to go up, and they're going to go up in March. And that is not good for buying stocks. It's going to cost more money because most people have to buy on margin. Margin costs money because you're borrowing. Your borrowing costs are going to go up. Very similar to what's happening in the real estate market. Either you already have a lot of money and you can just put it in there, or you've got to go borrow money and it's more expensive. So in essence, the carry trade in the markets is really being unwound. It costs too much money to carry. So you're going to do a lot of less things on margin. And even when you do, it's going to cost you more money. So again, the fact that interest rates are going to continue to go high is not going to provide a catalyst for this market and the S&P to turn tail and run higher. But as I did say previously, and I'll repeat myself there, that there is a situation where in the bond market, those charts continue to hang on. They got even closer today, but I'm going to go over to the 10-year note, take it up to the daily chart so we can see this is what I'm looking at here. Again, remember, intermediate wave A. So we're still within, I believe, an intermediate B wave. And out of that, it's going to have three waves of minor degree. There's minor A. This could be minor C. Minor A, minor B. So it's a C wave of a B. And then we march higher in a minor C wave up, which I believe would have to go pretty much straight up, get above 116, get back here. So rates, yes, rates could, if this plays out, rates could go back. But right now, the Fed funds and the Fed and everybody else is basically telling us, no, not going to happen. Doesn't mean it can't happen in after March. But prior, we're headed towards higher rates. And that's what they're pricing in right now. They're pricing in that 50 basis point hike. And so how that gets reflected in all of our bonds, it's what we're seeing. But these rallies, so here we are, we're sitting at a support level. We're sitting at where it's a very clean ABC, 5 down, put a C there, put a B underneath it, rally. If that happens and we get the 10-year, the 2-year, the 5-year notes, the 30-year bond, Fed funds to kind of park it here and maybe even recover a little bit, then yes, there's a chance. And the narrative would change, whether it's a good thing or bad thing. The market would move higher. The equity markets would move higher. So yes, this now going to go back to the NASDAQ. So if the bonds were to turn, and I mean, they got to turn and they got to go. It's not like the turn sit and fart around and then suddenly go up in a little bit and then come back down, sort of like what the market's doing. No, I'd be looking for them to start that rally, and it's a C wave, so to get a little power behind it and go. That would have to be the same thing here. How I'm going to count it out on a 4-hour or a daily chart, yet to be seen, because I got to do it right in here. And maybe there is no other way around it other than 1, 2, 3, 4, and the 4 would be all the way down here. Now, again, I do also agree with that currently algorithms and quantitative trading in general has changed a lot about how we count things and about Elliott wave. Elliott wave still works. Elliott wave still is based on the same principle. But when you have different trading things that are coming in and doing, you get different extremes. We get a lot of extreme moves, and how that changes and makes the wave pattern itself look like. So, for example, if this is a fourth wave, it would be very surprising because we'd be looking for something similar in size and stature, actually, of that second wave. And it basically is an ABC. It basically is even a zigzag, even though it should be a flat. So we got a lot of stuff going on within this. And how it gets paired up with this, I have to leave it as a fifth wave failure because of it's a B wave, and we already had the A and the B. I'm looking for a 5-wave C. Again, market will tell us. So we can keep alive a possibility forever. But I'm going to tell you, in the meantime, I am going to go in and I'm going to trade it day to day, because that is how we're going to make money. The big firms that are trading in these zero DTE options and producing just tremendous positions and throwing a lot of money in it may be delaying the inevitable, but they're making money. And that's really what they care about. And I think if that's what our goal is, we need to care about it. So I think the intraday And what I'm seeing seems to fit very cleanly in the way that I'm counting it right now. So I hold on to that as well, because I am looking to come in and trade and make money. Now, getting back to the NASDAQ. So going over this, I'm leaving this in place for right now. If the market is going to change its mind, I will know about it. We will know about it. And it isn't a matter of being right or wrong. It's a matter of having the ability to change and get in there and trade and make your money. To point fingers, it's like, well, the move's already happened and everything's done and we're all wrong. That's always been my point, that I do have a big picture look. And I do think I have a look as to what the economy and things like that should do and what's going to happen. But I'm in here every day. So I'm going day to day, and that picture at times can change day to day. The labeling is going to change. It is a work in motion, because the market is in motion. And only the market's going to be able to tell us, the collective. All of us traders together, that's the collective. That's how we're going to find out who's coming in to do what and what kind of size and where the money is flowing. Okay, back here to the NASDAQ, leaving the B right there. I got a 1, 2, 3, 4, 5 of minute degree now. I switched it around. I think I had it a little bit different. And this was a strange move, because I was putting that all done here, I believe. And then counting this would be a little bit larger, because again, I had put the minor wave one here. Well, the trick is like that minute 4 wasn't done. So that's the one that kind of went up. It wasn't a minor 2 or even a minute A of a minor 2. So, and then because we got this quick drop to new lows, that was the kicker. That was what, brought the conclusion together. So 1, 2, 3, 4, 5 minute equals first minor wave. Again, that in my realm, my analysis, gives me additional confirmation and confidence in that this B wave and this leg has completed the rally phase for right now, the B wave, and that we're in a C wave down. And then right now we've finished the first wave down. So I've taken off the larger fibs for the C wave so that I can concentrate, and let's just focus right on here as to what we got going on. So again, 5 down, we should get 3 up. If this is a minor 1, we'd be looking for a minor 2. Minor 2 will consist of 3 waves of minute degree labeled A, B, C, right? Just like this, A, B, C. Very small, but still an A, B, C. Right now, wonderful rally, which, by the way, was very similar to the rally into the close yesterday, where we had taken it from a low up to the session highs to get that close, particularly more interesting in the S&P than here in the NASDAQ. Same deal here. Hit the lows, take out all those resting orders, and then boom, rally back, straight back up towards the highs of the session. Now, putting a 1, it makes sense. That's how a wave 2 would start. It's like everybody jumping back in. Now, what can we expect? Well, let's put some initial retracements up there, which that's what's here now. 0.236, we're there. Excuse me, we've gotten above it, and that's at 12,211. But that is just very minor resistance in terms of the wave that we're looking for and what are the most common levels. Now, the most common levels here on a wave 2 are 50% to 62%. So it's right here and here and anywhere in between. So it's 12,412 and then up to 12,502. So from where we are, well, we got another 400 or 500 point rally. Could it happen? Sure. What are the odds? Well, we got a lot of numbers coming out tomorrow, and that might have a pull either direction. If they love the numbers, we'll be up there in a heartbeat. If they don't like the numbers, we're probably going to tumble back down again and then figure out, okay, what is this? What's extending now? Maybe this 5th wave is extending now. And that's all we're going to get. So we get a, a 1 of 5, a 2 of 5, and a 3 of 5, et cetera, et cetera. So there's a couple of ways, we can put fibs in there, but if it is 1, 2 of this 5, the next one should just take it straight down. And again, to new lows. And then we get a 4, and then we get another 5, and then we'll do it again. So it's a work, it's a move in progress, and we have to be able to go with it. And as I have been discussing, I think what really becomes important right now is having the ability as a trader to flip. Oh, volume and the price action is showing buyers. Buyers are present. I don't care why they're buying. I can just see what they're doing. We want to jump on. We want to ride. Now, I know that's not as easy, as if you're a swing trader or you're trading a different product than the future. Like if you're trading options or if you're trading one of the ultra long or short ETFs, you need to have a little bit more play. Well, I want to tell you that the wave down, you had that play. The wave up, you had that play. Being able to switch on a dime is what's going to become more important. So whatever product you're trading, even if you're trading like the SQs or the TQs or the Qs, those are nice moves in those markets as well. And in the ultra short, well, this one was glorious. Knowing when it was switching, you had to get out and go. So that's what I mean by being able to switch on a dime. In any case, what can we look for here? Well, here we have our levels going up. We have max anywhere, and the minimum would be 12,322. And guess what sits right there with it is the hourly 200 EMA. And that's at 12,327. And please, I want to just reiterate, I use the Thinkorswim, the TOS platform, and their EMA has a specific calculation that I believe is specific to Thinkorswim. So mine might be different than yours, but I've been using this one and I trust it. Okay, so I need an ABC up, put a number 2 up there. My outside of that would be here for the NASDAQ is that it's still inside this finishing fifth wave down for the minute fifth wave. So it's subdividing, in which case we'd have 1, 2. We got close to taking out that high, but no cigar yet. So if it does turn from here, I would expect it to drop very quickly and very hard back down. What's going to do that? Right now it's trading, it's down 33. If they really start to catch up some steam, we're sitting on the hourly 4 right now. Excuse me. Yes, we're sitting on the hourly 4, 8, and 20, all grouped together right there, right where the market is trading. So they're waiting for that, what the catalyst is going to be if we're going to break here. Because if we break here, we should end up down here. And we really don't have too much in between. Some little bit here, a little bit there, all the way down to the low. Now, if that were to occur and we're looking at something which could have extensions, we're going to go right there to where we had it. Those are on the extensions. And we're going to go from here. We're going to go here. Oops. Let me go change that. Going here. Come on. There you go. There to there. Oops. To there. And that would just be this would just be for that third wave. And that we got quite a bit. 100% is right there back at the low, pretty much. And then go below, we're sub 12,000. So we got 11,961, 11,920, and then 11,875. And that could just be for the third of 5. This is if we really start to tumble. We have to maybe consider this. And maybe just for tomorrow. Then it changes again. So remember, it's in fluid. It's motion. It's in motion. So if it continues to go down, we're crashing. And then you've got your bigger picture, which I showed you. If we run, then we run larger fibs that include the whole C wave. And again, if it truly is, I have no idea what's could happen, but there are so many triggers that could trigger this. Too many for me to mention. So if it should occur overnight, and we really start to tumble, you just need to rerun. In fact, I'm going to do it right now just so that I can show you. So I'm going to take off this secondary one, which goes for that small wave if it should turn and go down. Otherwise, I am looking for continued upside. Now, additionally, we can run, again, extensions from the top of the X wave. God, don't like it when it does that. Let's see if I can get this right there. There we go, right there. And I'm going to put it up to where it failed from. So here we have additional downside. Remember, 100% is all the way down here. So wave C, again, this is for the C wave, the bigger intermediate C wave. If we come in tomorrow and we're just tumbling, start falling, and then we're inside that C wave, I'll figure out the count later. Here's your support levels. And what did I do? I took it from the top of X to the bottom of A, up to the failure point of the B wave, right? Of the internal of the B wave. If you want to run it there, if it's going to change it by a little bit, I try to be as accurate as I can according to the count and put it there. And there's our levels coming off. All right, so now I'm going to take that back off because that is in the background. That's not what I'm looking for to happen. But should it happen, we know we have some points of reference that we can draw on. So right now, I'm looking for continued upside, an ABC, hopefully maybe just up to 12,400. That would fit the picture nice and clean. Get a bounce above or even here, actually. But this would make it cleaner and set us up for that third wave down. So again, minor 2, then we're looking for a minor 3rd, which should make that third wave look pretty small, right? Because we're up a degree. So that is the NASDAQ. So both in the NASDAQ now, here's the preferred is that we're going to finish, go ABC and up here. The alternate or the opposing view for that would be that we don't get much higher. The market just starts to fall apart here and we start to break down. If we break below 12,032, then we know we could be in an extended fifth wave, but we're only looking for something to come back down, not as far. And we ran fibs from the top of 3 to the bottom of 3 to the top of 4 to get the fibs on an extended fib. You also, that would be for the whole fifth wave. We also can run internally extensions from the top of 4 to the bottom of what I've labeled as 5 and to that high. That would give you this smaller fifth wave as well inside here, the third wave to sit inside that fifth, if we start to go down. So those would be your fibs you put in there. Now, right now, yep, we could have an A, a B, we could have a 1 and a 2. There's all kinds of things that could be here. If it wants to pull back, sure, no problem. If it keeps going up, then we're probably getting a zigzag where we get an A, a B, and a C. And we have a better chance of reaching a higher level. If we get up an A and a flat B, I'm not going to be looking for it to get much higher. Again, a little bit higher because we need to get up into that area. So those are the two looks that will be cemented either tomorrow or as late as Monday, but I would be looking for some action tomorrow. We've got, again, a bunch of figures, and I'll go over those in a minute. Over here on the S&P, it is the same picture. Once again, same conversation, but here it's even cleaner. To me, 1, 2, 3, 4, 5, that failure to there. And that was the biggest reason that I did it, because on this particular market, it was much cleaner in that it was the fifth wave of a smaller degree, and it failed. So those remain in place. And here we are. 1, 2, and I made a slight adjustment here as well, where I pulled the internal 3. So the 3 of 3, I pulled into here. And then we got an ABC 4. And then we got the fifth. And that's minute 3. Quick trip up here to as minute 4. And then a quick drop back down, new low, minute 5, minor 1, and a blast back above. So here, this was at 12 noon Eastern. So they had 3 hours to hit that and get it back up above 4,000. And they actually were almost getting ready to go above 40.35, actually 40.34, which was the current high for the session. And that would have just signaled, yep, that's the 5, and we're going to go in an ABC. I'm still expecting an ABC up for a minor wave 2. First resistance, 4,055. We should find some here again at 4,035, no doubt. But I would expect it to break. We get up to 4,055. Above that, we have the hourly 200 EMA at 40.65. Then we have the 50% fib for a minor wave 2 at 40.80, 40.81. And right above that, we have the 200 SMA at 40.84. Upside here, we're still got to include 4,100, believe it or not. And that would be pretty high. That would really take us up there. So what this wave 2 can't do is puncture that high, 41.88. Actually, where is that high? 41.80. 41.86. So I need to adjust a little bit. So yeah, cannot go above that as a wave 2, because then it's no longer correcting wave 1. So I'm not looking for that, but I certainly would think we're going to get up into here. And a minor 2. Now, same deal. If this starts to break down and just starts to give up the ghost, well, could it be that this this 5th wave is breaking down into its own? Sure. Then this could be 1, 2. And what would we be looking for? We'd be looking for a 3rd wave. How would that look like? Right there, and then put it right there. So what we'd be looking at is, let me do this and then this. We have coming in there at 39.69, 39.70. Then we have 39.55, 39.46, 39.32, but actually it's not really creeping and smashing through levels. So 39.70, 39.50 would likely contain a 3rd. Then we get a bounce and then another, maybe bringing it down into here. And then that intends to be minor wave 1. I am not saying that that is the case. But if we should walk in tomorrow morning, if we should get up and turn our computers on tomorrow morning, then that move may already be in progress. It can, for certain, pull back more as a B wave, right? If this is A, we get a little bit of B wave. Then again, you're running retracements. And your retracements go from that, Your retracements go from that low to that high. Oh, come on. Whew. Let's just try that again. Sometimes, there you go. So what we'd be looking for, a retracement down, right? And so an A and then a B, I wouldn't be looking much more than 39.95-ish. Right, we'll be honing in on 382 at 4,007. Then we have 4,000, 39.95, and 0.70, 39.90. B wave should not come all the way down. It can come in down, but it shouldn't break below here, put in a new low, and then rally. But it could. So both sides of that coin, we could. The market's very volatile in terms of coming in and smacking and then racing back. A lot of it has to do with the ODTE options, the 1 day to expiration options that really come on tomorrow. They've been trading all week, but tomorrow's it. And so you get a lot more play because there's no exercise. It's today at the end of the day. So you get a lot of things to do during the day. A lot of money gets moved in. A lot of volume gets created, and that can move an index real quickly, as we saw again today. Coming down to 39.73 and racing itself back above 4,000 and then some for the expiration that happened this afternoon. Okay, So here on the S&P, what are we looking at? We got minor wave 1. We're looking for a minor 2. Here are the cards. If indeed we continue to decline, but we don't go to a new low, it could be an A and a B. We've got our levels. It can go all the way down to 39.90 and then start to rally again. Or we also have an additional view that the fifth wave is extending, and that would be 1, 2, and we're coming off in a third, and then we know we have those levels that are bringing it down into a lot lower, 39.24-ish, etc. A break below all of that and a severe break could suggest that something else is happening and the market really is just going to flip and die. And then we're looking at going back out, and here as well, I can do it off my 4-hour chart. Here as well, we're going to put in extensions. First thing I'll do, get rid of this. And I can put these up so we can see them. And I'm going to put it to the failure. And this would be for the C wave. And initially, these are all support levels coming off, but we're looking for at least wave C to equal wave A, and that's at 33.61. And that would be pretty flat, and it really is kind of, but not also. So I'm actually looking for a little bit lower. So we're looking for that C wave to develop, and we just finished possibly minor wave 1, minor 2, got a 3 and a 4 and a 5. So we got a lot of work yet to do to get down there. So again, I'm going to take those off because I'm not looking for that tomorrow. And you can recreate them on your own machines. So that's where I'm going to leave it for right now. I don't want to stay on too long. I don't want to make it too long. And tomorrow is expiration. Tomorrow also, we have quite a bit of numbers. And this is for Friday, the 24th. We have consumer spending, personal income, the PCE Index, the core PCE, the core year over year. We have new home sales and current, consumer sentiment. Plus, we have a slew of Fed govs out there stumping it. They come in starting at 10:15 and Eastern, and 3 of them actually. No, 2 starting at 10:15, and we also have 11:30 and at 1:30. So all before the market. Actually, we have 2 at 1:30 p.m. Eastern. So all while the market is open. And you know how algorithms that are clicked for click words love to play into all of that. So it could be a very active day. It could be a lot going on. In any case, I wish everybody a very great trading day tomorrow. And our next update will be on the 26th, Sunday, the 26th of February. Have a great trading day.